Hi everyone, Mathis Connor here with Connor Management Group. Today is Thursday, January 23rd, 2014, and this week we're going to look at the best healthcare stock to buy right now. Here on the opening page, we see that the company is in the medical instruments and supplies industry, and we see its 12-month upside potential at 15.7%. On to the second slide, and we see that the name of this company is called Haemonetics, ticker symbol HAE. Once again, the name is Haemonetics. That's HAEMONETICS. And the revenue on this company is just under $1 billion, so it's not a household name, but we think it's an interesting opportunity, as we'll describe in the following slides. So Haemonetics. Haemonetics Corporation engages in the design, development, manufacture, and marketing of automated blood component collection devices and surgical blood salvage devices in the United States and internationally. It provides various plasma products, including PCS brand, plasma collection equipment and consumables, plasma collection containers, and intravenous solutions, as well as information technology platforms for plasma customers to manage their donors, operations, and supply chain. So basically, Haemonetics manufactures devices related to the collection of blood, the processing of blood, and also equipment related to the delivery of blood. The website is HAEMONETICS.com. So it's www.haemonetics.com. Their headquarters is in Braintree, Massachusetts. The company was founded in 1971. They have 3,563 employees. Once again, the ticker symbol is HAE. They're in the healthcare sector. Their specific industry is medical instruments and supplies. Haemonetics revenues for the last 12 months totaled $953 million. This company's a little smaller than some of the ones we've been looking at in the past. Their net income over the last 12 months totaled $31 million, and their cash from operations over the last 12 months totaled $94 million. The market capitalization for Haemonetics right now is at $2.15 billion. On to their products and services slide. We've got a couple of pictures here. We've got their logo, spelling out Haemonetics, and below that it's called the Blood Management Company. We have a couple of excerpts from their website. One is, with their Haemonetics products, they reduce costs, increase revenue with, it says, our new donation product. It says, introducing our new whole blood technologies microsite and helping hospitals enhance patient care and manage costs. And you've got a few pictures of a woman writing on a electronic tablet, another technician, a doctor taking one's blood pressure, and another looks like a bunch of doctors doing surgery. We also have a picture of their corporate headquarters. It looks like a 2 or 3 story building in Braintree, Massachusetts. And we also have pictures of the top 2 executives. A picture of Brian Concannon, their president and CEO, and a picture of Peter Allen, their president of Global Plasma. Okay, going on to some of their metrics. Annual revenues for the last 12 months, once again, $953 million. Net income, $31 million. And their cash from operations over the last 12 months totaled $94 million. Taking a look at their operating margins, Haemonetics operating margins for 2012 was 21.9%. And for 2013, it's been tracking to be 26%. So that's a nice increase in margins, and it's related to an acquisition that they made in 2012. The trailing PE ratio right now is at 69.6. That is unusually high, and you sometimes see distortions like that because of acquisitions. And if you can, it's best to try to find another source that will restate that PE ratio on a on an apples to apples basis. But as it stands, the trailing PE ratio is at 69.6. The forward PE ratio is at 16.8. The PEG ratio is at 1.5. Not too high. The price to sales is at 2.3. Also not necessarily really high. And the price to book is at 2.7. And the enterprise value to EBITDA is at 14.6. That's getting a bit high with that last one. Looking at the recent closing price for Haemonetics yesterday, the company closed at $41.70. The 52-week low for the company was $37.71, and the 52-week high was $45.90. So the price of the stock right now is basically in the middle between their 52-week high and the 52-week low. The 20-day moving average is at $42.31. The 50-day moving average is at $41.94. And the 200-day moving average is at $41.27. So those moving averages are pretty tight. So that kind of tells you that there hasn't been too much movement as of late on a net basis. The average daily trading volume for Haemonetics is 334,000 shares per day. The beta for the company is 0.7, so it's a little less volatile to the market on the upside as well as the downside. And the dividend yield is at 0%. The average dividend payout ratio is at 0%. Haemonetics doesn't pay any dividends. On to their stock price chart. We see back around, end of February, Haemonetics was around $40. The beginning of May, it dropped down to around $38 and then quickly rose to a high of nearly $46 in late July. And then they had a precipitous drop from near $46 down to nearly $40. And this happened in late July, early August. What happened during that period of time, they had an earnings miss of a penny. And there's quite a bit of pullback. The stock bounced around a little bit since late July, and it declined back down to around $38.50 in early November. It then increased again past $43, and it's now around $42. So the company's had a little bit of some ups and downs, but net over a year ago, it's around the same price. Now, overall, the financial statement quality of Haemonetics is very good. They do have some debt, but they do have cash on hand. Between $150-200 million, and that more than takes care of the debt that they have due near term, as well as any working capital demands. So the financial statements are in good shape. And as we mentioned earlier, their operating margins are improving substantially. Increasing from 22% up to 26%. That's a significant change. And that's related to an acquisition they made in August of 2012. They acquired a company they acquired the transfusion business from a company called Paul Corporation, and they've been integrating that into their operations. Additionally, their sales over the past 5 years partially relates to acquisitions, but the annual rates of sales over the last 5 years have increased 11.5% per year. Their earnings are expected to increase over the next year, and they also made another acquisition. I believe it's a modest acquisition of another company called Hemeris Medical's SOLX Collection Systems, and that's expected to help their margins increase a bit more. So, the price per added trend, as we just saw overall the past year, you would consider it flat. The overall market right now, we're still bearish. We're starting to see some pullbacks from time to time in different names. So there's some near-term headwinds, but we tend to believe that, well, at least when markets correct, they at least in our view, they tend to correct quickly. And past performance is no prediction of the future, but we'll see how it goes. But we still feel like Haemonetics is a good opportunity. The recent closing price was $41.70. Our model sees a 12-month price target of $48.25. So that gives this opportunity the 12-month appreciation potential 15.7%. So Haemonetics is a company we think you should take a closer look at, and it's in the healthcare industry. We know there are a lot of changes going on, and this is not one of the bigger companies, but we see some upside potential with this name versus a number of others. So we feel that this is the best healthcare company to buy right now. And on to our last slide. If you haven't yet, please sign up for our Saturday morning newsletter. You can get it by going to www.gmcstockpicks.com. You can be among the first to hear about great investment opportunities in the market. Our picks are a result of our own self-developed algorithms where we are reviewing, analyzing, and ranking over 3,500 stocks every week. So we feel good about what we've been doing. We're new on the block, and we intend to show everyone just how good we are. So go to our website and sign up. And that's all we have for this week. Take care and talk to you soon.